Okay, so till now we have covered so many topics, and in the previous class we were talking about pattern trading. And as I mentioned, pattern trading is one of the most important part. We discussed about symmetrical triangle in the previous class, which is a easier pattern. It's easy to find out symmetrical patterns. Okay, and also we discussed how to execute when we get a break in symmetrical triangle. So we did talk about this part actually, this one and this one, right? These are both similar. You can clearly see these are both symmetrical triangle. It's just that the first one is breaking in the upside and the second one is breaking on the downside. Okay, we discussed how to execute these trades, right? So we will wait for the retracement first. Once there is a retracement, then we are going to enter, right? Just before the retracement, we are going to put a stop loss. And how to calculate the exit point? To calculate an exit point, what we do is we simply take the length L, right, from here to here. Okay, and generally, if the points are not in a single line, in a single vertical line, then what you do is you take the shortest length. Okay, if it's something like this, then you take the shortest length and you try to put it around the retracement, from the retracement itself, from right around here. Okay, and just before the length, when the length is going to end, you exit from the chart or exit from the trade. Okay, this is generally how we do it. Also, I told you how to use MACD or RSI on the basis of this one. Okay, and similarly, this one is the opposite. You can clearly see again triangle, break of triangle in the downward direction, retracement, and then the drop. Okay, again same logic. Okay, so these two we have discussed. Now let's discuss this ones, ascending and descending triangle. Now before we move to that triangles, see, remember, any kind of pattern can break in either direction. It can break in the upper direction or it can break in the downward direction. Okay. So any kind of pattern. Now that doesn't matter if it's a symmetrical triangle, ascending triangle, descending triangle, falling wedge, rising wedge. Remember, any kind of pattern can break in either direction. It's just that as a trader, we play on the basis of probability. So the probability, for example, let's say if I talk about this one, ascending triangle. Okay, right now we are going to talk about this triangle. This one, ascending triangle. Okay, now ascending triangle, it says C. What does it says? It says continuation bullish only. Bullish only. That means, does that mean the market is only going to move up if we see or if we face this kind of particular triangle? No. So let me do it one thing. Let me make it a bit black. So you don't read it. There is nothing like bullish or bearish only. Okay. Market can move in both directions actually. Yeah. So let's talk about the ascending triangle. Now, ascending triangle is very simple. Now, if you guys please tell me what the market is trying to do, what the buyers and sellers are trying to do, and who do you think is more powerful in this case? Okay, just tell me. The market is moving in a sideways direction. We know that. We can clearly see. Okay. Now, can you please tell me who do you think is more powerful? Do you think buyers are more powerful, or do you think sellers are more powerful right now? Okay. Who is going to win? That is a different case. That we will discuss later. Okay. But what do you think when you look at this kind of pattern on your screen? What do you think? Who is more powerful? Buyers or sellers? In the last class also, I asked the similar question in the starting, and of course, some of you did give me some answers, right? But uh, just to make it more clear, who do you think? Who is more powerful, buyers or sellers? These are sellers, of course. Okay, and these are buyers. Who do you think is more powerful in this case, buyers or sellers? Okay, we have new people actually here. Okay, no worries. So see, as I told you in the previous class, buyers and sellers, they're always in fight in the market. They're always trying to win each other, basically. Okay, sellers want the market to move down, buyers want the market to move up. Okay. Now in this case, we can clearly see that the buyers, they are actually pushing the market in the upward direction by creating a higher low. So each low is higher than the previous one. Okay. Here, the sellers, what they are doing, they are only defending a single line or a single zone, right? They are only defending this particular zone right now. Okay. But the buyers, they are continuously attacking it. Okay. So in this scenario, in this particular pattern, there is a 70% chance that this pattern generally breaks in the upper direction. There is a 70% chance. I'm not saying there has to be or there should be, the market must move in the upper direction. No, right? The market can also drop from here. It's just that out of 10 times, 7 times you will see that the market is going to break in the upper direction. Okay, if you see this kind of case. Okay. Now let me quickly draw it for you guys. Now again, it's going to be very simple. Okay, now you wait for the retest. That is always there. You always wait for the retest. Okay, then you enter when the market takes a U-turn or after the retest basically. So somewhere right around here. Okay, you put a stop loss somewhere right around here. Enter. Stop loss. Okay. 1 second, I think BTC is moving. Okay. And then what you have to do, how to identify exit point? Again, very simple. You just have to take the length L from here to here. If you, if you don't have, if you did not watch my previous video or previous class, then please do watch it. Then you will understand how I'm going to calculate this length. Okay, and just put the length right around here. See, that's, and just before the length we have to exit. That's it. It's a very simple pattern. Ascending triangle is a very simple pattern. Now, what if the market drops in the opposite direction? What if that? Okay, let's understand that first one. Then that one also. So again, same logic. The market is moving something like this. Okay, but this time what happened? The market went down. It broke this particular support trend line and then went down. Okay. Now in this case, there is a 30% probability. Of course, it can also happen. So in this case, what we have to do is we have to just take a short portion from here. We have to enter stop loss. Okay. Now how to exit? It's very simple. So just take where this particular trend line is ending. Okay, and from there only you can easily exit. You don't have to calculate the length also. You can just, this can also be a good point to exit, to be honest. This point. Okay, because this might act as a support in the future. That's why. Okay, so if the market is dropping, then this area, okay, might act as a support. So of course, this is the right area to exit. Okay. This is the ascending triangle. Ascending triangle has a 70% chance that it will break up and a 30% chance that it will move down. Okay, remember that. Generally, see, if we are in the bullish market, then generally even the ascending triangle goes in the upper direction and even the descending triangle goes in the upper direction. And if we are in the bearish market, then even the ascending triangle will also go into the downward direction. Okay, it depends on where the market is moving. Okay, next one. Let me quickly complete this one also. So, descending triangle. DT. Again, there is, draw it something like this. Okay. So from here to here to here. Now, what do you think? Where it will break? Down or up? So in this one, you can clearly see the sellers, the buyers, what they're trying to do is they're trying to define this just a support zone. And the buyers, they are pushing the market in the downward direction. Okay, so here what we can do is we can just drop the market like this, let's say, wait for the retest and drop. Okay, this has a 70% chances. If the overall market is bearish, then only this has a 70% chances. Okay. How to enter, how to exit? Very simple. Enter, stop loss. Always enter after the retracement. Do not try to just jump ahead and get into the market as the market drops. Wait for the retracement. Generally, you will find a retracement on a 1 hour chart, and then the market will drop. Okay. And how to exit? Similarly, just like the previous, you take the length L and you put it right here. Okay. And based on that, you try to exit. Okay, very simple one. Now let me, the next one is basically this one, right? Okay. So in this case, what happened? The market will break in the upper direction. Something like this. This has a chances of 30%. If the overall market is bullish, then you will also find the descending triangle can also break in the upper direction. And of course, I will show you some examples of it. Okay, then it will be pretty much clear for you guys. But yeah, see this one. Now, let's, how to enter? So enter right here, you put a stop loss. How to exit? Very simple. The top resistance level is going to be your exit point. You don't even have to calculate the length in this case. It's just that the top resistance level is going to be your exit point. Okay, that's it. Now let me show you one or two examples so it becomes clear. Now, if you see right now what I have done, I have already mentioned, like I've already drawn few support and resistance in this case. See, this is what? A descending triangle. Okay. Now, depending where the market moves, if the market of the BTC moves up, then this particular descending triangle will break in the upper direction. Okay. And this triangle is actually present on everywhere, almost on every chart right now. On Matic also it is there. See, a particular resistance trend line, a support level, right? Now, if it breaks up, then how I'm going to exit? I might choose this area to exit. That looks good to me actually. Okay. If it breaks and there is a proper retracement, then only, of course, I will do it. But let's say if I want to play this chart or this particular pattern, then I will do something like this. Okay, this is going to be the case. If it drops, then see, we see right here, it did drop and then it went up. There was no retracement actually. Okay, and again, this is what we call a fake out. Okay, but if this particular pattern breaks in the upper direction, then this something like this we can take a trade. Let me show you one important part actually. Yeah, this one. See, descending triangle. Correct? Descending triangle breaking in the upward direction. Generally, there is a 70% chance that a descending triangle generally breaks in the downward direction. But the overall market was bullish. See, the overall market was bullish. And because of that, what happened? The market moved in the upper direction. So how to play this one? Very simple. You, after, see, the market went up, came back down. That's a retracement. So you enter around here, you put a stop loss. You try to find out a exit point based on this particular level, based on the resistance level. See, a proper trade. If you guys remember, I mean, I don't know if you were in the previous market cycle or not, but this candlestick, this is where Elon Musk bought Bitcoin. Okay, he basically, I mean, I think he already bought it before, like 4 or 5 months back, but he has to disclose that he has already bought some Bitcoin and on this particular date, 21st I mean, yeah, 29th January 2021. Okay, so he disclosed that he bought Bitcoins, and because of that, the price of Bitcoin went up by almost 19%. Almost 90%. But yeah, now this one also, this is also the same thing. See, almost a descending triangle. There's a fake out also, but yeah, a descending triangle moved in the upper direction. Boom, right? Just moved in the upper direction. Now, just like that, you will find this kind of triangles almost on every chart. Almost on every chart, you will find this kind of triangle. Even if I go on maybe any other random chart right now. See, on dot also I've already created this particular triangle. Okay. Depending where the MACD moves, if the MACD, if I see a negative cross on MACD in the bearish area, and I will see that the overall market is going to go down, then of course we can take a short position. Okay. But if I see MACD is moving in the upper direction, overall volume or overall market is also moving up, then I might also take a long position. Okay. And if I take a long position, it's very simple to figure out how I'm going to exit. I mean, let's say 8 is actually a good number to exit. Okay. Long position after the retracement, the stop loss, something like this, and this can be a good example. Something like this. Okay. The risk to reward ratio is not 5 right now, it's 4.8. But when you take the actual entry point and something like this, it will become more clear actually. Something like this is going to happen. Yeah. Matic has moved up. See, Matic has moved up a little bit. Now we have to see if it comes down again and there is a retracement or not. If there is a retracement, great. BTC is also trying to move up, which is also okay sign. Yeah. But yeah, these are a few examples of ascending and descending triangle. Let's move ahead. Now let's talk about continuation patterns. Okay, these ones are very simple actually. Okay, and I think you will like them more. Okay, in the bull market, because see, this is rectangle, these two are rectangles, right? Then we have a flag, so something like this or something like this is a flag. Then we have pennant, so this triangle is a pennant. Okay, now this particular bullish patterns are very easy to figure out. See, if the market is moving up and then it goes sideways, something like this, then you just have to draw this kind of two lines. And what will happen? The market will move up. Okay, there will be no retracement. There will be no, it won't be like this. Okay, it will be only like this only. Okay, because this is a continuation pattern. That's why. Okay, there won't be like a retracement. You will find. You won't find the retracement generally. Okay, I can't hear you. 1 second. Everything is good on my side. Can you please check? Can you please ask someone else? Can you guys hear me, please? Let me know. Can you guys hear me? Okay, yes. Okay, got it. Thank you. Okay. So I was saying that this is a continuation pattern. Okay. And generally in the continuation pattern, you don't find a retracement. The market just moves up. 1 second, guys. I think the market is moving in the upper direction. Let's see. Let's just check. Okay, so Matic has broken out. This one has also broken out. This gala. Same logic, like see, by applying the same logic, the resistance trend line, the support levels, you can clearly see. So this actually looks a good one to trade. I mean, we just need to figure out on a 1 day chart if BTC is going to go down or not. Because on a 4-hour chart, BTC looks very good. On a 4-hour chart, see, I told you this kind of positive cross. See, so on a 4-hour chart, BTC looks very good actually. But if I do it on the same thing on the 1 day chart, then we have to be a little bit cautious. But yeah, I will just see maybe after this class actually. The Matic actually looks very good, very healthy. But yeah, let's continue the class. So this is a continuation pattern of a rectangle. Now, a similar kind of thing can happen in the downward direction also. Something like this, the market might go down, then it might create a movement like this, and then again a drop. Okay, this kind of thing can happen. Now, how to trade this one? It's very simple. So after the breakout, you enter. Just after the breakout, you don't have to wait for the retracement. Just after the breakout, you can easily enter. You can put a stop loss right here. Okay, now there is no exit point, to be honest. In this kind of pattern, there is no exit point. Now there is one way you can calculate is you can calculate the length of this particular rectangle, and then you can put it right here. But in that way, you won't be able to make as much money as possible. So what I do generally in this kind of cases is that I wait for the market to move up. Okay, you just keep your eye on the screen. You look at your trade. If the market moves up by, let's say, 2 or 3%, so what you do, you remove your stop loss, you remove this stop loss, and you put a new stop loss around your entry point. And again, if the market continues to move up by 4 or 5 more percent, then you just keep on increasing your stop loss. Okay, as the market keep on moving up, you just keep on increasing your stop loss. That is the best way to make or to get profit from this particular strategy. Okay, similarly in the downward direction also. So once there is a breakout in from the downward direction, you sell. Okay, you take a short position, you put a stop loss right here, and as the market drops down, you remove this stop loss and put a new stop loss around your entry point. Then again, if the market continues to go down, then again you remove the stop loss and you put a new stop loss below that. Okay, so in that way you can start increasing your stop loss as the market is moving in that particular direction. This is the best way to make money by using continuation patterns, because in continuation patterns, what happens generally, this kind of thing happens. So what will happen, the market will move by 20%, and then the market will move sideways like this, and then again it will move by 20 or 40%. Okay, but we don't know how much it can move. It can move by 40% or maybe 20% or maybe 10%, right? So in that way, if you want to make as much percentage as you want, then just keep on increasing your stop loss. Okay, this is the one example of it, rectangle. The second one is flag. So flag generally comes in two phases. The market moves up, then you will see a flag. It is also a rectangle, but just in a different direction. That's it. This is a flag, and then it will move up. Same thing. Or if the market is moving down, then it will create a flag like this, and then it will move down. Okay, just a rectangle in just an inclined way. Okay. Now, how to trade this one? Same logic. Nothing to be worried about. Enter. Stop loss. Enter. Stop loss. This is your flag. Flag. Okay, this is a rectangle, and then the next one is a pennant. Now, pennant is just basically like a symmetrical triangle. The market will move up, it will create a pennant, and then again it will move up. Okay, how to enter? You already know. Enter, stop loss, and exit point. There is no exit point, as I said, right? You just have to keep on increasing your stop loss. If you trade on Bybit or on Binance, you will see an option called trailing stop loss. Okay, just Google about it, watch some videos about trailing stop loss. It's very easy to learn. Okay, so as the market increase by 2%, automatically your stop loss will also increase by 2%. Okay, it's an automatic method. You don't have to even wait and look at the trade, to be honest. Okay, it's a very simple thing. Similarly, if the market is dropping, then again this kind of thing can happen. Okay, so here you enter, put a stop loss, and that's it. There's no definite exit point. How we determine the stop loss distance when the market is going your direction? Let's say 3%. 3% is good enough. If the market is dropping down, in this case, for example, by 3%, then you can remove your first stop loss, put a new stop loss around your entry point. That is the first thing. So now you are already at a zero level. So there is no loss, no profit in this case. Okay. But once again, if the market drops down by, let's say, 2% more, okay. So now the market is already around 5%. Then what you can do is you can just remove your stop loss from here and then put a new stop loss right around here. Okay. Now this difference, you can take it as a 2% difference. So as the market keep on increasing by 2%, 2%, 2% more, you just keep on increasing your stop loss more and more. Okay. That is the safest way generally. So this is our continuation patterns. Continuation patterns are likely to be seen in a continuation market. So basically, for example, let's say, see this one, the one, there's one right in front of us. See how the market move. As I said, like first the market will move up. I mean, where is percentage? Yeah, this one. First the market moved up by 15%. See 15, 16%, right? So most of the traders, what they do is they generally miss the first movement. I mean, it's not just like, because you can't keep a track on every other coin. So generally, most of the traders, they make this kind of mistake and they miss this first move. Okay. And what happened next? Those people who took a trade right here, they start booking their profit in this area. Okay. And you can clearly see that the market moved up. Then this is a flag, right? It's a flag. See, flag, the market moved up, right? And once there is a breakout, you have to, of course, enter right here, put a proper stop loss. Okay. And then you can clearly see, right? So now in this case, for example, if the market is moving up and if the market is moved up by 6%, so what you have to do? You just have to put a stop loss somewhere here, right here in the middle. That's it. Okay. And then if the market again moved up by, let's say, here, then you put a stop loss right here. The market moved up by here, you put a stop loss right here. Okay. And in this case, what happened? The market went down. Your stop loss is triggered and you are out from the market. By doing that, what you have done is you have made at least 19%, or let's say 15%. Okay. You don't have to be greedy, but let's say 15%. But that is a good part. That's a good thing. So generally, you will find this is what we call a continuation patterns. Now, if I go on a lower time frame, let me go on a lower time frame, I might find more continuation patterns. Not a proper one actually, but this can also be a continuation pattern. It's not a proper pennant actually. It's actually more like a descending triangle, not a proper pennant. Let's remove this one. Yeah, this is a pennant, right? See, it's a very small thing, but yeah. See a pennant, right? What happened? The market dropped, created a pennant, and then again it dropped. So of course you can easily enter right here, put a tight stop loss, and let the market run. Okay. So these are the few examples of continuation patterns. Mostly you will find continuation patterns when the market has already agreed upon into a particular area, or let's say if it has already said that it is going to be bullish or bearish. Okay. Now a few coins are already started moving. Okay. So this is our continuation patterns. Continuation patterns, or this particular patterns, they have no retracement. You won't find retracement in those. Okay. Now let's talk about falling wedge and rising wedge. Okay. Falling wedge and rising wedge, they have approximately 90% winning rates. Okay. 90% of the time, I mean, of course, there's always 10% of the time they can also go in the opposite direction, but 90% time they always end up in the upper direction, in the downward direction. So this is falling wedge. Okay. Now what happens in falling wedge? Something like this, let's say. Okay. Then the market will break, come back for retracement, and it will move up. Okay. In this case, what you have to do, there's a 90% chance. Okay, that's just right. There's a 90% chance. If you see a falling wedge, it should move up. Okay. Then you have to enter, put a stop loss. And now how to figure out an exit point? Your exit point will be based not on the length, but on the resistance levels. So this is the resistance level. So here you can exit. Entry, stop loss, exit. Okay, so this is your falling wedge. Rising wedge, just the opposite of it. I mean, this is my favorite pattern because they have a very high chance of probability. That's why. So falling wedge, sorry, rising wedge. Okay. And see, in rising wedge, sometimes we won't find a retracement. Why? Because, as I said, panic is a stronger emotion than greed, right? So if people are going to panic, they might not give you time for the retracement. But in the greed phase, generally you will get a time for retracement. Okay. So in panic, market might just go down like this. Okay. So when the market is moving in the downward direction, there's a very high chance that you might not find any kind of retracement. But if the market is moving in the upward direction, then there is a very high chance that you might find retracement. Okay. So again, what you have to do, enter, stop loss, exit based on the support levels. So this is the support level. So here you can exit. This is your entry. And this is your exit. Rising wedge and falling wedge. Now let me show you some examples of it actually. This is a very good ones. One example is right around here, I believe. This is one example, see. Falling wedge. What happened next? Market break and moved in the upward direction. When to exit? Right around here you can exit. Great. Nothing to be worried about. See? Falling wedge. Generally in the falling wedge, the market moves up. Rising wedge, see this one. There's a very big rising wedge, of course. But this is a rising wedge. Okay. Then again, wait a minute, let me show you one more falling wedge. You can clearly see one more falling wedge. See this one, a falling wedge. Breakout. See, there is a retracement also. So if you closely see, the market went up, came back down, retracement, and then it moved up till to the resistance level. That's it. So there is a falling wedge. Okay, and that was the rising wedge. This one was the rising wedge. Okay. I mean, I think I can draw this one also as a falling wedge, I think. Yeah, this can also be a falling wedge. The market then again moved up in this case. Okay, let's get ahead. Okay, so now the simple ones are completed. So we have understood about the rectangles, the four rectangles, simple, right? The bullish variants or the bullish variant of continuation patterns, great, so very simple. Falling wedge, very simple. Okay. Now let's focus on this four. Okay. Now let me show you in a simplest way. Let's say strategy worked. What next? We are supposed to look at the chart or market. Are we supposed to look at another chart or market? Let's say the strategy worked. What next? If the strategy worked, that you book your profit. So that's the first thing. Are we supposed to look at other chart or market? Yeah, I mean, yeah, of course. I mean, see, daily, as I said, you have to give at least 1 or 2 hours for your trading, and daily you have to do the same thing. So if one trade is completed, one strategy is worked and it's completed, then you try to find out a new chart, like a new pattern, okay, a new strategy that what works on different charts. So that's the game. I mean, let's say the strategy worked. What next? Of course, I mean, if the trade is completed, you will book your profit. You will exit from the market. Great. Are we supposed to look at other chart or market? You are supposed to look at other chart. So if you want to only trade in crypto, you can just look at the other charts. If you want to change the market, so let's say if you want to go from crypto to forex or stock, it's up to you. It depends on where your knowledge lies. Okay. But yeah, I mean, your one trade is completed, then automatically you go ahead and try to find a new trade, right? But it's not like we have to be in a hurry. So if your one trade is completed, you're already in profit of 15%, 10%, 20%, something like that. Then you wait for 1 or 2 days. Then you look at the market again. And then if you find some trade, then only you will trade it. Okay. It's not like you have to constantly looking for the trade. Okay. I hope I am clear. Yeah. So now let's talk about double bottom, double top, and triple top. Okay. Now see, first and foremost, this double bottom, double top. Just remember two names: double bottom, double top. These are reversal patterns. Okay. And I mean, of course, double top, triple top plus inverse head and shoulder and cup and handle. They all four of them are reversal patterns. Now, what is a reversal pattern means is basically the market will move up, right? So the market is moving up, then it might create something like this, okay, and then it will drop. Okay, so that's a reversal pattern. Okay. Now, these four are reversal patterns. Now, double top, triple top, these are just names. You don't have to remember the name. You just have to understand the concept. Now, what the concept says, I mean, I think all of you understood what support and resistance, right? Okay, the first principles of trading. Okay, so what these patterns are trying to say is that the market will move up. Okay, it will break some kind of resistance, for example. Sorry, some kind of resistance. It will move up. It will create a new resistance. Then it will move down. It will find a support. Then again it will move up. Again it will get a resistance. Okay, again it will move down. Then it will break this particular support level, move down, came back up, and then it will drop. This is double top. That's it. Double top. Done. What is double top? Double top is basically this kind of M shape between a resistance and a support. Okay, and the market will take a U-turn from there. Now, I mean, you can call it a double top, but what if this happens? What if the market does something like this? You say, okay, this is creating a double top. Let's wait. Okay, what if the market again goes up and then again drops? Now it becomes a triple top. What if again this goes up and again comes down? It becomes a four top, okay, or quadruple top, right? Whatever you can say. So, instead of learning the name, understand the concept. Okay, when the market is getting rejected from this particular resistance level, the support level is also broken. Okay, the market gets a retest from the support, so the support becomes resistance now, and then the market drops. Then what we will do? You will just take the length, and this is how it works actually. Just take the length of this particular area. You put the same length right around here. Okay, you enter. You enter after the support becomes a resistance. Okay, you let the market drop, and then just like that, how we did previously, you exit before the length. Okay, you put a stop loss right around here. You put an entry point. Okay, and you press exit point. This is double top, and the same concept lies for the triple top. There is nothing new. A quadruple top. Okay, whatever you can say. But the same concept is for the double top. It means 2 top and 3 tops. Something like this. So same logic, nothing to be worried about. So you don't have to remember the name, just remember the concept. If the support is broken, then what you will do is you will wait for the retracement. You take the length of the previous area, you put it right here, and you exit based on that. That's it. Don't have to remember the name. That's it. Okay. Support, resistance. Support is broken. Support turns into a resistance. You take the length of the previous area, you put it below that. Okay, and you exit based on it. That's it. Now, how does a double bottom looks like? A double bottom will look like exactly like same, just in the opposite direction, just inverse of it. The market will fall down, of course. Okay, it will break this level, it will move up, it will move up again, and then it will break this particular resistance level. The resistance will convert into support, and then it will move up. What you have to do? You have to take the length of this particular area. You have to put a length right around here. Okay, based on your length, you enter, you exit, you put a stop loss. Great. That's it. This is your also double bottom and triple bottom. Same logic. Okay, there's nothing new. You can give it any name that you like, but this is the same logics. Okay. Now you see this one. Market went up. The market went up, came back down, and then again moved up. Here also the market went up, down, up, down. Okay, break right around here, came back down for the retracement, and then moved up. In the opposite action, this happens. Okay, so the logic is same. Is basically how a resistance becomes support and a support becomes resistance. It's just that you have to take the length in this case to figure out an exit point. Okay, or generally in this kind of cases, you already know the exit point based on the previous data. Okay, so that's it. It's just that these are reversal. So you will always find them at the top or maybe at the bottom of the graph. Okay. Let's try to find out example of it if we can. Let's see if we can find out an example or not. This can be example. See, let me remove the drawing. See these levels, same levels. Market moved up, came back down. See, the market is dropping, right? The market is dropping. It moved up. See what happened next? It broke this particular level, and this level becomes a support in the future, right? See, support becomes resistance, resistance becomes support. Classic thing that we have understood every time. Now, in this, what you have to do, the market will move up, it will come back down, there is a retracement. You enter somewhere right around here. Now, how to exit? The one thing is basically you can automatically draw an area to exit. That's the exit point based on the previous data. Now, if you don't want to use the previous data, then what you have to do is you just have to take to the length L and put it right here. Almost same thing. Okay, there is nothing new. Okay, that's it. That's a double bottom. And also you can also call it a triple dot bottom also. Okay, same concept. Now, if you want to talk about double top, then this looks like a good example right now. So two tops break the particular bottom. See, market went down. Boom. I mean, it did went down pretty much hard. It went back up, retracement, and then again it went down. Okay, so now you take the length L if you want, and put it right here to exit. Same logic. I mean, even if you don't take the length, you already know when to exit. See, this looks like a very good support level to exit, right? So even if you don't take the length L, you already know where to exit. So this is double top or triple top, whatever you can say. But yeah, now the last ones are inverse head and shoulder pattern and cup and handle pattern. Now, of course, I can show you examples of cup and handle pattern, but to be very honest, I've never used it. I've never used it till now. Like I've been trading like 5-6 years now, but I've never used cup and handle. I'm not a fan of inverse head and shoulder pattern, but still, I mean, now I can easily figure it out. If I can see an inverse head and shoulder pattern or anything, okay, I can really figure it out. Just 1 second. I have to message one guy. Okay. So inverse head and shoulder pattern, let's discuss about it. So now what is inverse head and shoulder pattern? There is also a reversal pattern, first and foremost. Guys, if you have any question, please start dropping it in the chat. Okay, I will take it from there. So inverse head and shoulder basically looks like something like this. Okay. Like a head, like a human head, right? And then we have a left shoulder and a right shoulder. That's it. That's the inverse head and shoulder pattern. What will happen? Automatically, we have a tool in the trading view. So using that tool, it will create a trend line like this. Okay. And if the neck is broken, so this is like a neck, right? So if the neck is broken, then you can enter. This is your stop loss. Okay. Now how to exit? To exit from the market, you have to take the length of the head. You have to take the length of the head, and then you have to put that length from the neckline. Okay. And just before the length ends, you have to exit. The stop loss. This is your head and shoulder pattern. Now the same concept can be done in the reversal order also. Okay. So let me show you examples of it. It will become more easier that way. Let's go on BTC. Let's remove this thing. Yeah, this part. Now you might already see some kind of head and shoulder pattern in this case. So see on the left hand side, we have different tools, right? On these tools, if you go on the fourth option called patterns, then you will find this one, head and shoulder pattern. Okay, and it's very easy to use. So something like this. See, left shoulder, right shoulder, there's automatically a trend line. You can clearly see it's automatically there. Then we have a right shoulder and then a break. Correct? Now, after the neckline is broken, then you have to enter. So you take a short position, you enter, you put a very good tight stop loss. Okay. And how to exit? You take the length of the head from the trend line. You put it right around here. So it clearly says to exit right around here. This is very good. See, enter, exit based on the length of the line. Okay, and stop loss. This is one example. Another example I can show you is this one. Again, same logic. Let's say head, sorry, left shoulder, right shoulder, this one, and the break, right? Again, you take the length L, put it right here, you put a very tight stop loss and exit. Now, how to exit? You take the length. Almost right at the edge. Right at the edge. And generally we exit before the line, but yeah, right at the edge. Okay, so second example of it. Third example of it can be look something like this from the bottom reversal, right? This one. Oh, sorry. Head and shoulder pattern. So something like this. See. Okay, now how to exit? Again, you take the length L. Something like, and you put it right around here from the neckline to this one. You can clearly see whoever entered right here, they started booking their profit at this point. Okay, that's a long position. Tight stop loss and target area. Okay. So these are few examples of head and shoulder patterns. It's a little bit hard to find out head and shoulder patterns, to be honest, but I mean, few people it's very easy for them. For example, in this case, this is also a head and shoulder pattern. See this one. See. Now, if someone has taken this kind of trade, I mean, of course, I did not, but this looks like a head and shoulder to me. You can easily put it right, something like this. And then whoever entered at this point, the stop loss did not touch, of course, but they can easily exit at this point. For that, they might have to wait because there's a very big head and shoulder pattern. See, it's a head and shoulder pattern for like from July to from June to March, like almost a year, at 10 months at least. But this is a head and shoulder pattern. Okay. Cup and handle pattern, I have never used it. Okay, but if you want to look at it first, let's say. I have to Google it because this is something which we call cup and handle. Looks like this. Cup, and then the handle of that cup, and then the breakout. Yeah, see this one? Cup, then handle, and then a breakout. Okay. So in this one also, what people do is they take the length of this one, they put it right around here. If they wait for the market to break, same thing. Cup, handle, breakout. Guys, do you have any question? Please let me know if you have any question. I will be very, very happy to answer. Okay, and of course, I mean, if you have more questions, maybe next week or next, you can just drop it in the group. Yeah, I will answer you. I will reply you there. No worries. Okay, but till now we have completed almost every topic that I wanted to discuss with you guys. We have completed the intermediate course of trading. Okay, so if you just watch all of my video, whatever 12 classes we had, right? If you watch all of it, it's good enough. That's like around 99% topics that I have covered, which is good enough to start doing swing trades. Okay, we have covered everything. Like we have covered from the basic itself to the psychology part, to the risk management part, to the basics of support and resistance, right? To the pattern trading, to the indicators, to the volume, MACD, RSI, right? We have covered many things. I mean, see, maybe some of you might able to understand everything in one go, but if you watch my videos again and again, it will be more clear to you. Okay, and of course, if you have any question, I will be available in the Telegram group. Okay, and you can just tag me and ask me questions, or maybe you can just drop me a message in private. That is also good with me. Okay, I have no problem. Okay, but only if you are in the group, because I generally check if people are connected with me in the BTCV group or not. Then only I message them. Okay, but yeah. So yeah, guys, any question, please, I'm happy to answer right now. If not, then of course you can just drop any kind of message or any kind of question in the chat in BTCV group, and I will answer it from there. Very clear. Thanks. Very informative. Thank you. Thank you. Thanks, guys. Thanks for coming. Any kind of question, please let me know. If not, then of course I think the admins can take it over. Okay, no worries. I think there is no questions. Plus, no worries. If you have anything to tell me, thank you, Yash, for all the lessons here. Thank you. On Matic what? On Matic trade you see? On-matic what? I mean, at debug, end debug, can you tell me on-matic what? No worries, just drop the message in the Telegram group. Okay, I will take it from there. Okay, thank you everyone. Thank you for joining.